We are here, we are here, we are here on this amazing day, everyone. This is Cam Jones FX Daily Analysis. Disclaimer, I am not a professional. Please watch these videos at your own risk. These videos are for entertainment purposes only. Thank you. Friends and family are on Discord and Telegram. Families and friends will prosper. Let's get back to business. Alright guys, today's date is January 26, 2021, 1:51 p.m. Eastern Time. Let's take a look at USD CHF. That will be the United States dollar versus the CHF franc. So let's grab our blue paintbrush. Let's start the market. Okay, so the market started off in this area here. It started off with an M pattern. Once we see the M pattern, we see a drop. About 2 to 3 push downs. Market back in April 1995 created an area of support. So from there the market rallied up, pushed up back to the top, put itself in like this type of wedge pattern here. We have an area of support here. We have an area of major area of resistance here. So then the market bounced around in this wedge pattern, broke out, came down, created a W, shot up in this area here, so it returned back into previous areas of support and resistance, which is between this range, as we can see. From there the market pushed up higher, created new levels of higher highs, tried to break through this resistance, pushed up twice, was able to break, retested previous areas right here, wasn't able to break through, came back down, pushed down one, pushed down again, another drop, got another drop right here, and then returned to areas of support of previous areas from the past. And that's right over this way. From there the price tried to come right back up, wasn't able to hold, came back down, pushed all the way back down further past the previous areas of support, as we can see here. From then it created a new area of support, which it bounced between the areas of support and an area of resistance, as we can see. So once the market came down in here, it bounced up, came back down, bounced up again, wasn't able to break, so it did a complete drop. And right there we can see an M pattern. Then from there the market dropped back down. So we have a tenor to the bottom here, a tenor to the bottom here. So that shows me that, okay, you know what? It shows us that the market came down, lost momentum, pushed up, retested previous areas of support with a major push down again, which we see another antenna. So then the market looked like it tried to come up, but then it's bounced around a consolidation. So price action is currently right here, which I just circled, is in between this range. So it's basically bouncing down this range up and down. So I'm going to clear the screen. From there we're going to find price action, which we already know price action, last active candle, which will be in this corner here. So this last candle here is price action candle. From there we know that we can see we have some type of range. So we have support here, we have another major support here, which price to see if it's price is trying to break here to go down lower. And here is a major area of resistance. So price action is between this range. So it's bouncing around in this range. We're going to have to see if the market is going to break through and go up, or break down to go lower. So we don't know if it's an uptrend, we don't know if it's a downtrend. If we grab our trend line, let's go with our horizontal raise, and we're going to say, hey, if price breaks through this area, it's going up somewhere. If price breaks down through this area here, it's going down. If we had to take it, if it breaks down this, if price breaks through the support, it will go down further, which will be somewhere here in this location. if price would break up above this resistance and break up further, it will be somewhere in this area here. It'll try to reach. So what we're going to do is, let's go down the weekly time frame. Let's take a closer look to see what's going on. From there, we can see that price is look like it's respecting our trend line. It's not on it to a T. We can see the areas where the price came down is bouncing up and down. There's another antenna to the bottom, so price probably will try to be breaking up to the upside. Maybe not. That's the weekly. Let's go down to the daily. Let's see what it's doing. So yeah, price again, like it came down, touched our I didn't move it close enough, but it touched our SR line to see if it can try to come up. Let's go down to the 4 hour, see if we see anything. So the market looked like it's going up, so it's a slight uptrend from the 4 hour. So if we can grab our trend line and we can set it on the daily or the 4 hour or the weekly, trying to see the clearest one. I think I like it on the daily. So we see 2 touches on the daily, 2 clean touches. So the market may try to bounce up higher. So the market has reached this area of so we're going to circle this area. Let's go back to the monthly. So we can see on the monthly, this is my little circle I just put. So price has came up, came down, came up, touch resistance, retest resistance again to break that down to support. Now we can see later down the time frame on the 4 hour, we can see the price is trying to come up, and that will be this area here. So if we look at on a monthly, we can see that the candle is a doji, so it's a indecisive candle. So the candle don't know, the market don't know what it's going to do. It's not too sure if it's going to go up. It's not too sure it's going to go down. We go down to weekly, we can see we can find additional candle. So from here we can see that we have the doji candle, another candle form, overlap the previous 2 candles. So it looks like it's going to be in an uptrend. So the market's coming back down to retest previous areas to look like it's trying to go up. So once we keep on looking on what price action candles are doing, then we can see if it's going up or down. For right now, we can see the 2 touches on the uptrend, but we're not sure if it's going to fully go up more. Let's go down to the daily. On the daily, we can see that it looks much more clear. So we can see that the market came down, it created that doji candle, which was indecisive. The market don't know what it's going to do. Green candle form, overlap the previous areas, past previous 2-3 areas or 3 areas. So 1, 2, 3 overlap. From then the market came up, came down, retested previous areas to come up further, retesting previous areas again, come up to retest previous areas again for about the 3rd time. So then the market's coming up, and then the market came back down just a little bit to probably come back up. At the end of the day, it's still respecting our trend line. So it's not a downtrend, it's not an uptrend. So we'll just keep on riding that. So let's set these pips. Let's take a look at our pips and our trades. Let's see what we're looking at. So if we mark up on a daily, let's stay on the daily. We marked up on the monthly, let's stay on the daily for right now. So we can see that the price is going up. So if the price is going up, for right now we're going to say we're in an uptrend, unless it breaks our uptrend. And if we take it up a little further, let's see how far we can take it. If we found entry, say somewhere here, we can take that up to the top here, which would give us, and this is the daily time frame, so this would give us a total of 1,508 pips. Which you probably got to break that down because the market may turn around, may come down. If we go on a 4 hour time frame, let's go to the weekly. So if we go to weekly time frame, we can take a look at certain areas that the market may turn back on. So if we had to create some more SR lines between our support and resistance, kind of squeeze these together so we can see the market came down and come up, touch the resistance, touch back to support. Looks like another one could be here somewhere. So we'll go back to the monthly. Let's go to the daily. So on the daily, we can see that if we took entry here, it'll give us a total of 1,508 pips. From there, we could take it to each SR lines. So the next SR line we can take it up to, as possible, will be right here in this area. So I'll circle it. So we're looking for this price action candle to bounce all the way up and down, all the way to this orange line. Once you get here, we can see if it's going to be reversal back down to the downside to take it back up further. If not, it'll have a breakthrough to come down to retest, to break out further, to come down, retest previous areas of support, to break out further, to come back down, to retest areas of support, to come up further, to do it once again, to reach the top of our TP. Alright guys, let's take a look at our Forex cheat sheet. Let's play with some wedges and some patterns. Let's take a look at the triangle pattern, which will be the ascending triangle. So from there, the trending triangle, which we see is that the market came down from somewhere, came up, reached areas of highest highs, to come back down to retest previous areas of second levels of a support, to come back up to reach, to touch areas of resistance, to come back down to touch higher areas of support, to come back up to touch the same levels of resistance for the third time, to touch higher areas of support, to break out the resistance area to go straight up. Let's take a look at this descending triangle. Descending triangle is working its way down. So from here, the markets came from up somewhere, it came down to support, it came back up to resistance, it came back down to exact line of the area of support, to break up, to go back to go close to areas of resistance but didn't touch, to come back to the same areas of support for the third time, to go back up to try to reach areas of resistance again. So it created higher lows or lower highs. And then from there, the market just broke out. And once it broke out of this major area of support, of which we see 1, 2, 3, 4 touches, and it broke down, it's out of here. So you can look for patterns like this in the market to see if it's going to break up, break down, or continue to go sideways. Let's take a look at the wedge pattern. So the wedge pattern is the market. So this is the ascending wedge. So ascending wedge is going, so the market is going up in some type of direction. So the market's coming down from somewhere, it hit an area of support, to come up to reach new areas of resistance, to break back down to the same areas of support, to find new areas of high highs of resistance, to break down once again of the same area of support for the third time, which broke through resistance and created new high highs for the third time in a different section of the resistance areas of the wedges, or the wedge, before the market came and broke through previous areas of resistance and broke through 3 touches of the support to break down further. And once you see the market, once you see that wedge, ascending wedge pattern forming, and the market turns around and it comes down, and you can kind of remember, okay, you know what, I've seen this from somewhere, this is the ascending pattern. You would know, okay, what, this is where I can get in my trade at, take it all the way down, and then we'll see where it goes. So once you find your next area of SR line,